Hello, my name is Oladele from Excel Garage. I want to walk you through how this template works in terms of reporting your income statement and statement of financial position from your trial balance. This is the table of content sheet. It shows you the link available to statement of financial position, income statement, the trial balance for current year, and the trial balance for prior year. Right, by clicking on the link, it takes you straight to that location where it's related to. Now, as we accountants, we know that during month end, one of the things that are required of us to prepare our management account, which shows your statement of financial position and your income statement for that period. Some may include cash flow and some other balances, but here we are focused on statement of financial position and your income statement. Right, so the second sheet, which is your income statement, shows the income statement for the business. Right, it shows you 2017, 2016, and the variance. Forget the year. It can be for current month, last month. It can be for Q1 against Q2. It can be current period Q1 against current or prior year Q1. It doesn't matter of how you want to do it, right? But we're going to do one for a financial year. But the nomenclature, how it is structured, doesn't change. The only thing that changes basically is narration and the trial balance you're using, right? For this example, I'm using the full year financial statement for Excel Garage. Now, if you notice, what we made use of is a sum if. This similar structure can be done using your sum product and your get pivot function. But in this particular one, we made use of sum product. So that if you look at it, property, plant, and equipment, we have done it so that it's so dynamic, so that if you change the classification of a particular line, it automatically changes. Right, it balances. So for instance, if you take note, your deferred tax is nil. If I go to 2017, right, let's go for one of the line relating to, or let's go to 2016, one of the lines relating to PPE, for example, PPE, property, plant, and equipment, right? I assume I change it to deferred tax asset. Right, if I go to the statement of financial position, if you notice, it has changed automatically. That's because we've linked our trial balance so that they are properly mapped the various line items, so that dynamically, anytime they change, it can effectively reflect on the dashboard on our statement of financial position or income statement. The same principle applies to our revenue and cost of sales. Right, so let's say for the sake of example, right, we have wages and salary for admin staff. Right, let's assume it's actually a cost of sales line. If we change it straight, or let's go back to our income statement. If you look at it, what's cost of it? 297 and 296. If I go to my 2016 and this admin is entering into wages, I change it to cost of sales. Cost of sales. Yeah, cost of sales. Right? If I go to my statement of income statement, it changes. Now that's the way it has been structured, such that our balances change based on that. What does this mean? It means that at the end of the period, if I have my trial balance, all I need to look up the data here into the various lines of GL that I have and my mapping. As soon as my mapping is set, everything works without a problem. Now, what I have done example here is that I've tried to do the mapping on 2016, then allow 2017 leverage on how it has been mapped in 2016, so that it's consistent in mapping. Right? Someone else may take a different perspective, but that can be done. For a typical financial statement, it's the same similar concept. The only difference is that we will now do from notes, from trial balance to notes, from notes to the three major or four components of your financial statement. That's your statement of financial position, your income statement, your cash flow, and your changes in equity. Now, this is the principle behind preparation of a standard financial statement. If you go through this process, the only difference is how you've classified balances and how you properly structured. The same concept can be applied. Don't forget, this also can be done using sum product and get pivot data, depending on your understanding of Excel. I've also done it so that the variance analysis will change based on the threshold that has been set. So for example, if I change my threshold that I only want to see balances, for it to flag balances above 15% change in, to have a 15% change, absolute change. If I click 15%, this is the only balance that has changed by 15%. Automatically, it highlights it and tell me that I should focus and tell myself, why is that change? The same if I apply to 9%, you see there are only 3 balances that meet that criteria, right? If I change to 3%, the same thing happens. So that's the principle behind this, and based on this, that is how this thing has been structured. I hope to see Hope you enjoy and be able to play around this. If you have any question, you can reach me on my email or my phone number. Thank you for listening. Thank you for watching the video.